Alright, yes guys, welcome back to another video. In today's video, I'm going to be breaking down the ICT unicorn model, literally step by step, a full A to Z guide. So we're going to be going through this PowerPoint, explaining the key topics and explaining literally everything that you need to know about this strategy. And then towards the end of the video, we're going to be going over a few live trading chart examples. So let's jump straight into it. All right, so starting off, what even is an ICT unicorn model in the first place? All right, so anyone that's new to the channel, they don't actually know what this model consists of. The unicorn model consists of a breaker block that is paired with a fair value gap. All right, this is why it's such a high probability model, because the more PD arrays you have in one area of interest, the more likely the model or trade is to play out. So in the next few slides, I'll actually be explaining what a breaker block is, what a fair value gap is. All right, so if you don't know what a breaker block is, all it is, right, is two lows next to a support or sell side level, all right? One low has to trade below the previous low, taking out the sell stops. All right, so what does this do? In a bullish scenario, right, this traps the traders that are trying to long that trade, okay? And they're very early in. The previous low then gets taken out. All of those traders get stopped out before the real move occurs, okay? So it's two lows next to a support level, and then the previous low has to get traded through. Then a short-term high will get traded through, creating a market structure shift, and then price will retrace back to that old short-term high or old resistance, and then you can expect it to act as support to push price higher. So it's pretty much a low, swing high, followed by another lower low, taking out that previous low, followed by another higher high, taking out that short-term high, and then price retraces to that short-term high, acts as support, and then pushes price higher. So the highest up close candle inside of that price leg will be considered your bullish breaker block, okay? Now this is vice versa for a bearish scenario. So hopefully that makes sense, guys. Again, don't worry if it doesn't, we will be going over a few examples on the chart so you guys can understand this model even better. All right, so fair value gap. Now most of you will know what this PD array is, but for the people that don't know what it is, all it is, right, it's a free candle formation, and the fair value gap is the gap that's left behind in price from the first candle's wick low to the third candle's wick high. Okay, and there's an imbalance left in between those candles. Now, of course, this will be different for a bullish scenario. It will be the first candle's wick high to the third candle's wick low. All right, guys, apologies for interrupting the video here, but I've got a very huge announcement to make, okay? The VIP Signals Group is on sale for 50% off. Now, we haven't run a sale like this in absolutely ages, so please go make sure to secure your spot and take advantage of that sale. Usual price is a $1,000 one-time payment, but as you can see on the website here, it's only $499 one-time payment. Okay, we only have 4 seats left, so go make sure to secure your spot. Once those 4 seats are sold out, we are not restocking, and that's gonna be it for the lifetime sale. Prices will be then going back up to that $1,000 one-time payment, most likely Monday morning. So you have around 24 hours after this video is released to secure your seat. We have over 324 members in the VIP Signals Group currently, and they're all smashing take profits. As you can see here, okay, if you purchase the lifetime access plan, you get access to the full A to Z mastermind course, teaching you my exact models that I trade and that I've used to make over 6 figures in trading. Okay, you get access to the live trading signals. So I go live every single morning at 9:30 a.m. New York time, where you can watch me trade live. And let's say you can't tune into these streams, you can also take advantage of the signals that are sent into the Telegram chat automatically. All right, you also get access to a VIP chat room. Okay, so you can actually network with other ICT traders, ask each other questions, and expect to get fairly quick answers from the other experienced members inside that group. So a ton of value inside of this. Now, before I get back to the video, I just want to show you these Telegram chats for transparency reasons and show you last week's results. Let's start off with Monday morning. We took a short trade and secured over 60 handles. Tuesday, we took a little loss for only 8 handles, so we're still up on the week, very heavy. Wednesday, we took another short trade, ended up getting stopped out for 6 handles. Second AM macro, we took another short trade and we smashed TP for over 45.75 handles. So as you can see there, both losses were recovered. Thursday, we took a long trade, ended up securing ourselves 36.75 handles. And then Friday, we actually took 0 trades as there was 0 opportunities in the market. So overall, total weekly results and gains, we're up over around 120 handles for the week, which is very good, especially during NFP week, which most traders struggle and fail to perform. But yeah, guys, I'm gonna leave you with that. If you are serious about getting your trading to the next level and it's something that you've been struggling with for a long time, you're looking for a mentor, you're looking for someone who actually has experience when it comes to trading, then this place is definitely for you. So yeah, guys, take advantage of that sell and go secure your seat right now. But other than that, let's get back to the video. All right, so this has been a highly requested topic also about daily bias and how I actually use daily bias with my strategies. A lot of people have been messaging me asking me to do a video about daily bias. Now, there's not a lot that goes into it, hence I've just added a segment into this video explaining how you can use daily bias with this exact model. All right, so these are the questions that you want to ask yourself every single day to determine your bias. All right, is price reversing? Okay, is price retracing, or is price expanding? Okay, what phase is price currently in? Now, once you identify what phase price is currently in, you want to mark out your obvious swing highs and lows. These will act as your buy side and sell side levels on that time frame. Any imbalances, order blocks, breaker blocks, fair value gaps, you name it, okay? You wanna mark those out on your time frame, such as the daily, and this will be your drawn liquidity and when price is likely to head to next. So you can use these areas of interest as a magnet where price can actually draw towards. Now, let's say price isn't reversing, it's not retracing, and it isn't expanding. Okay, what is your daily bias then? It's gonna stay neutral, okay? Simple. But yeah, guys, there's not a lot that goes into daily bias. I like to mark out the levels on my daily time frame, get a rough idea where price is heading to next, then react to what price is actually doing, okay? Don't try to predict, always react. So if price is showing you otherwise, right, and your bias is different, then maybe you are wrong about your bias and it's time to switch that bias, okay? Don't try to predict and marry a bias. Always try to react to what price is actually doing, okay? And lastly, very important, what times of the day should you be trading this model? The times of the day that I trade this model that work the best is the 2 a.m. macros, okay? So the first AM macro at 9:45 to 10:15 a.m. New York time, and the second AM macro at 10:45 to 11:15 a.m. New York time, okay? Those tend to work the best. I don't tend to trade a strategy inside of the PM session. You can give it a go, but speaking purely just from experience, these are the 2 macros that tend to work the best with this strategy. So anyways, now that we've covered everything that you need to know about this model, we're gonna be jumping into the live trading charts to showcase you guys a few examples, and that way you guys can actually understand this model a little bit better compared to just a PowerPoint. But yeah, let's get straight into it. All right, guys, so let's start off with the first example, okay? I haven't really cherry picked this example. I've literally just hopped on the chart and found the first thing that I see. Let's start off with a breaker block example, all right? What actually is a breaker block? What is a fair value gap? Everything I need to know about this model, okay? So as you can see here, we've come up to a buy side liquidity level. As you can see, we've taken out that buy side and we have our first high. It's 2 highs and a short-term low that is traded through near that buy side level. So as you can see, we have our first high here, followed by our swing low, followed by another higher high, okay, trapping shorts. So taking out anyone that's gone short here, taking out buy stops one more time, and then having that displacement lower, okay? So this is our lower low, trading through that short-term low, creating a market structure shift, all right? And then the lowest down close candle in this scenario, because we are bearish, is gonna be your breaker block. So as you can see here, this is our lowest down close candle. We're gonna mark that out to the right and mark it as our breaker block. Now, as you can see here also, we have the fair value gap. So for anyone that doesn't already know what a fair value gap is, in this bearish scenario, you can see the first candle's low, okay, so the wick's low here, and the third candle's wick high, okay? There's a gap left behind in price, and you're gonna mark that out to the right and mark it as your fair value gap. And in most cases, you're gonna have your short entry off of the edge of the fair value gap, stop loss above the swing high, and then you wanna target the opposing liquidity, right? So as you can see, guys, this model is very, very high probability and it works very well, okay? Once price taps into these areas, usually it doesn't hang around there for a long time, okay? It's an immediate reaction. And that is one of the reasons why I love trading this model. All right, so again, guys, I haven't cherry picked this example. I've literally just found it on the chart. So very, very random, but as you can see, it looks pretty clean. So we've come down, we've swept this sell side liquidity level, okay? So we're coming towards a support zone or a sell side level, all right? What are we looking for next? We're looking for that breaker block to form. So the first formation of a breaker block is that low, okay? So do we have two lows that are next to the sell side level? Yes, we do. We have a low here, okay? So make it very, very clear for you lot. As you can see, this is our first low, okay? I'm gonna mark it out like this so it's easier for beginners. Do we have that second low? Yes, we do. Second swing low is here, all right? So boom, two swing lows. Now what are we looking for next? That short-term high. Where is the short-term high? It is right here, okay? Does the short-term high get traded through? Yes, it does. Clear displacement, price trades above that short-term high, creating a market structure shift. Now, where is our breaker block? In that price leg, okay? Inside of this price leg, as you can see, the highest up close candle is this one. So what you're gonna do, you're gonna mark out the highest up close candle within that short-term high price leg, mark it out to the right. That is your bullish breaker block. What's the next thing that you're looking for? You're looking for that fair value gap, okay? Because without the fair value gap and without the breaker block, this isn't a unicorn model, okay? It has to have both. It has to have both the breaker block and the fair value gap. If it doesn't have the breaker, it's not a unicorn. If it doesn't have the fair value gap, it is not a unicorn, okay? So again, bullish scenario. First candle's wick high to the third candle's wick low. That's your fair value gap. Very, very simple. Okay, and lastly, you can have your entry at the fair value gap. Stop loss usually at the swing low. However, in this scenario, we're risking way too much, right? We're risking 44 handles. So in this case, you're gonna move your stop at least below the breaker block, okay? Now, since this breaker block has two consecutive up close candles, I'm treating that as my whole breaker block, okay? So hence my stop loss is going below this candle's low, right? Just make sure you're not risking more than 25 to 30 handles max on NASDAQ, but usually a good stop loss placement is either below the displacement candle's low, which is this second candle here, or the first candle's low, or below the breaker block, okay? So either way, we're risking around 25 handles there, and of course, target the opposing liquidity, boom, 87 handles secured, buy side liquidity swept, as you can see here, okay? So very, very simple, guys. There's not much to it. Hopefully these examples have helped you out and you got some value from watching this video. Okay, if you have, please leave a like, leave a comment, share and subscribe. Also leave some suggestions down in the comments below of what type of video you want to see next. But yeah, other than that, guys, I hope you lot enjoyed this video and I'll see you lot in the next one. Take it easy.